Hey, what's up everybody? I'm Chris Dingle with New View Mortgage Solutions powered by Edge Home Finance. And if you're a first-time home buyer, this video is for you. Today, I want to walk you through the entire mortgage process from the day you get on the phone with your loan officer all the way to sitting at the closing table with keys in your hand. A lot of people go through this process feeling confused or like they are just waiting on emails they don't fully understand. But my goal today is to change that. Once you know what's coming and why, this whole thing feels a lot less stressful. So, let's get into it. The first thing that happens after you get pre-approved is a strategy call with your loan officer. Now, this isn't just your loan officer saying congrats, you're approved. This is where you actually talk through what the approval means for you, your specific numbers. You'll go over what price range you're approved for, what your estimated monthly payment looks like, and how much money you'll need to bring to closing. Your loan officer will also walk you through what to expect when you start house shopping, like how to make competitive offers and what to avoid doing with your credit and bank account while you're under contract. Think of this call as building the game plan together before you step into the field. Your offer got accepted. This is a big moment. Now things move fast. Your real estate agent will send the signed purchase contract to your loan officer. As soon as they have it, they can officially start working on your loan. At the same time, you need to start shopping for homeowners insurance. So reach out to a few insurance companies, get some quotes, and once you pick one, share the quote with your loan officer, and then ask the insurance agent for a binder. A binder is just proof that the policy is active. Your lender needs that before you can close. Don't wait on the insurance. It's one of those things that seem easy but can hold up your closing if it's left to the last minute. Once your loan officer has the contract, they'll send you a loan estimate. This is a document that breaks down your loan in plain numbers, your interest rate, your monthly payment, and your estimated closing costs. They'll also send a package of initial disclosures. These are required documents that you have to sign before anything can move forward. Here's two things you need to know. 1. Read through the loan estimate so that you understand the numbers, then sign disclosures right away. There is a 3-day window before your lender can technically proceed, and that clock doesn't start until you sign. And 2, this is a loan estimate. These are not the final numbers, but your loan officer will usually estimate costs high so that the final numbers are lower than you expect. So the faster you sign, the faster everyone moves. Don't let these sit in your inbox. Your purchase contract has a closing date on it, and that date matters a lot to the lender. Here's something a lot of buyers don't know. Lenders need time. They typically need at least 30 days from when the loan officer receives the contract to get everything done. Sometimes 45 days depending on the loan type. If the closing date on your contract is too soon, your loan officer needs to know right away so that your agent can request an extension. This is common, don't stress about it, but it can't be ignored. When your agent is negotiating that closing date, make sure your loan officer is in the loop. They'll tell you exactly how much time is needed. Once you sign your disclosures, the lender orders an appraisal on the home. The appraisal is an independent review of the home's value. A licensed appraiser visits the property, looks at its condition, and compares it to similar homes that are sold nearby. You pay for this up front, usually somewhere between the $500 to $800 range, though it varies by area. Now, one of 3 things can happen when it comes back. The home appraises at or above the purchase price. Best case, everyone keeps moving. The home appraises below the purchase price, meaning it's worth less than what you agreed to pay. When this happens, you have options. Renegotiate with the seller, pay the difference yourself, or in some cases, dispute the appraisal. Or 3, the appraiser flags condition issues that need to be fixed before closing. Your loan officer will walk you through whichever scenario comes up. Around this same time, you need to decide how you want title held on the home. Title is the legal ownership of the property. The way it's written matters, especially if you're buying with someone else or if you want it in a trust or an LLC. Your loan officer and the title company need to know exactly how your name and any other person's name should read on the deed. Spelling counts. Middle names, initials, all of it matters. This is a legal question, so if you're unsure what's right for you or your situation, talk to a real estate attorney. But don't leave this until the last minute. Get that information to your team early. After your initial approval, the underwriter, the person at the bank who reviews your file, will likely come back with a list of additional items they need. This is normal. Doesn't mean that something's wrong, it just means they need a few more things to verify what's already in your file. It could be a letter explaining a large deposit in your bank account, updated pay stubs, documentation of a gift from a family member. Whatever they ask for, respond fast. The underwriters are waiting on you, and every day of delay is a day added to your timeline. When your loan officer sends you that list, treat it like it's urgent, because it is. Before closing, your loan officer will check in with you about your homeowner's insurance binder. If you haven't gotten it yet, the document that shows your policy is active, that needs to happen right away. The title company and the lender both need it before you can close. If you've already ordered it, just let your loan officer know the status. Sometimes there's a delay between when you pay for the policy and when the binder actually gets sent over. You can also choose to have the policy paid for at closing. Your loan officer can help you track it down if needed. About 3 business days before closing, you will receive something called the closing disclosure. This is the official final version of all your loan numbers, your loan amount, your interest rate, monthly payment, and your exact closing costs. It replaces the loan estimate you got at the start of the process. Read it carefully. Compare it to what you and your loan officer discussed. If anything looks different or confusing, call him. You must receive this at least 3 business days before closing. That's the law. So if something delays this document, it can push back your closing date. That's another reason why getting things back to your loan officer on time throughout the whole process matters so much. Once all of your documents are in, insurance binder and your remaining items from underwriting, everything, your loan officer submits your file for final approval. This is where the underwriter takes one last look at everything and gives the green light to close. At this stage, your job is simple. Don't make any major financial moves. Don't open new credit cards, don't make big purchases on credit, don't quit your job, don't move any money around in unusual ways. When you're this close to closing, the lender may re-verify your credit and employment, so keep everything stable. Clear to close, also called CTC, is the best news in the whole process. It means the underwriter has reviewed everything, approved everything, and you are good to go. No more conditions, no more back and forth. When that message comes from your loan officer, take a breath. You made it. From there, your loan officer coordinates with the title company to confirm your closing time and location. The title company will send you a cash to close number, the exact amount you need to wire before closing. And here's something important. Do not wire that money without calling the title company directly by phone first to confirm the wire instructions. Wire fraud is real, and scammers specifically target home buyers. Always verify before you send anything. Closing day is when it all comes together. You show up to the title company's office, or sometimes a mobile notary comes to you with your ID and your wire confirmation. You sit down and sign a stack of documents. Some are loan documents, some are transfer of ownership documents. The notary walks you through everything. It usually takes about an hour, give or take. Once everything is signed and the funds are sent over, the title company records the deed with the county. And at that point, you get your keys. That's it. You're a homeowner. That was a lot, but now you know what's coming. And knowing the process is half the battle. If you have any questions or you're ready to get started, reach out to me at Newview Mortgage Solutions powered by Edge Home Finance. You can call or text at 704-363-7520 or send an email to cdingle@newviewmortgage.com. And if this video helped you, Share it with someone you know who's thinking about buying their first home. Let's get more people into homes. My power is giving you the power of homeownership.